And go.
Good morning, Monday morning listeners. It's a beautiful day and I want to welcome you to Morning Coffee. Today is the original and first segment of Michelle's Monday Money Minute. And thank you so much for being here. I have with me today my friend and financial literacy expert, Ina C. Fitch, and she is the CEO of the Academic Federal Credit Union. Ina, are you there?
Yes, I am here.
Hi, how are you today?
I'm good. How are you?
I'm so happy to be here. It's just a gorgeous day here in New York, and I'm really excited to talk to you. We've been friends, I guess, for about a year, and when we get together, we always talk about our favorite subject, money. And so I'm really so excited that you have accepted my invitation to be my very first guest.
And I'm excited to be here, and money is my favorite thing, so go, baby, go. Let's do it.
Let's do it. So you told me that this month, November, is dedicated to putting more money in the month. Is that how you say it?
That's my theme for the year, is put more money in your month. There's lots of different ways to do it. Where would you like to start?
Well, an issue that is near and dear to me, and I think to many of our millennial listeners, is student loans. And I think that a lot of people, parents, as well as former students and current students, are very confused about the world of student loans.
So, okay, I can absolutely go there. I have a 25-year-old who is fighting that struggle right now, so it's something that I think about and talk about all the time. One of the things that we should know, one of the mistakes that we make is that we don't ask ourselves the right questions, so we're not making good decisions. So my first step in how we're going to deal with this is you should have to go online to where you have all your student loans and look them up one by one and answer these questions. And I'm going to give you my happy questions, which are, how long do I have this loan for? What is the interest rate? What kind of government loan is it? Or is it a personal? Is it a private loan from a bank? What are the forgiveness programs? What kind of deferment or forbearance do they have? Is it variable or fixed rate? And then you put them into two buckets, my government loans and my non-government loans. Government loans have forbearances, they have forgivenesses, they have deferment, and they have the ability to pay them based on your income. And the private loans don't offer any of those options. So if you're going to consolidate them, you want to keep your apples with your apples and your oranges with your oranges and consolidate them separately. So you might end up with 2 payments instead of 10. But if you can get your government loans consolidated, and I know they have programs for that, into one loan, it's a 10-year program, and they can base it on your income. So if you're not making a lot to start, it will allow you to pay it without strangling you. Private loans do that by making the length of the loan very, very long. So it's a 40-year loan or a 30-year loan. So now you're taking your education and you're making it a mortgage payment. If you can avoid that, you want to avoid that. You want to keep the length shorter, even though the payments might be slightly bigger, and then you can stretch out your government loans because those will end up being less expensive in the end.
Because they're at a lower interest rate, generally speaking?
I'm sorry, ask me that again?
Because they're at a lower interest rate?
They're at a lower interest rate, and they have programs. So if you write to the government and you say, look, I'm only making $30,000 a year, I'm just starting out, I cannot make these large payments, they will adjust them down for you. And then you just have to verify your income I think it's 14 months, and then they will adjust up as your income goes up. But versus having a large payment because it's only in 10 years, they'll make it income-based, and that will make it much more affordable. They can also, depending on if you're willing to teach in different areas or if you're willing to do certain programs, they will forgive parts of it or they will lower interest rates on parts of it. They average their interest rate, whereas the private loans have a specific interest rate and they make the payment smaller by making the timeline longer, which pushes up how much interest they earn. To consolidate the government loans are much more price friendly and put more money in your month.
Okay. So you gave us a lot of information there in a short amount of time. So I want to make sure for our listeners they have a chance to jot down what it is that the questions are that they should ask about each of their loans again. So if you are a student who has several loans from different organizations over the course of your education, you would like our listeners to now jot down these questions and for each loan be able to answer these questions. How much is my loan?
I'm going to give you the questions slowly. You have, what is the interest rate on the loan? How long is it for? Is the interest rate variable or fixed? How much are the payments? What are the forgiveness programs associated with that loan? And what kind of deferment and forbearance programs do they have?
And then once they gather this information, are you suggesting that there's a website that they can go to figure out how best to address those loans and which to hit first?
So if they're government loans, you want to start by going to loanconsolidation.ed.gov, because that will give you all the government programs to consolidate various types of government loans. So if you have some Stafford loans and some Pell loans and some TAP loans, and each of them is a different payment, and now you're overwhelmed with 5 or 6 or 10 different payments, these government programs will put them all into one loan, which makes it much easier to deal with and keep track of. myfedloan.org is another place to go to look into consolidation options for government loans. paymystudentloans.com. Any of these will help you figure out different ways to consolidate them. If you go to a bank website for loan consolidation, it is going to not necessarily ask you all the questions you want to have asked, and so you want to be careful what sites you go to, and you want to have all your information already in front of you so you're comparing apples to apples. Otherwise it can get very, very confusing.
That sounds like an excellent start to set up. So tell me about somebody who's had some success with this, because it might sound overwhelming to our listeners, and I want them to know that how much they can actually really save by taking this advice and sitting down to make this list.
So let's say you have $50,000 in student loan debt. It's individual loans, you have 5 of them, and they average 5%, and you're going to pay them for 10 years, which would be a government program. You're going to pay $530 a month, and you're going to pay about $13,000 in interest. If you consolidate them to one private loan and you give up all your government choices, you can make the payments for 25 years at $252 a month, which is way cheaper, but you're going to pay $38,000 in interest over those 25 years. One of the questions you want to ask is there a prepayment penalty? Because if there's no prepayment penalty, you might want to take a longer loan and pay it off faster as you can afford to. But if there is a prepayment penalty, then you're not gaining any advantage. The prepayment penalty will ensure that you pay all that interest. And that's what we're trying to avoid. That's what makes the loans so terribly expensive.
This is so interesting, Ina. I love it. I hope you'll stay with us. When we come back, we have to take a short commercial break, but I really want to get down to some more of the nitty-gritty of how we can save money in our month.
Great. Looking forward to it.
Great.
High-achieving students. Internationally renowned faculty. And award-winning alumni. a 226-year history of excellence, and a beautiful urban campus. The University of Pittsburgh.
We've been a VIP Pet Care family.
Prescription products. VIP Pet Care, dedicated to improving the lives of...
When it's time for Jersey Mike's to make a really great sub, this is what we do. It's what we've been doing. It's what we've always done. It's what we'll always do. So what are you doing? Jersey Mike's. Be a sub above.
Graduates of our university end up going places. Same goes for our students. Because while our campus may be a launchpad for bigger and better things, it's also a prime destination, filled with sights, sounds, and some pretty good eats. So, while you're preparing to take on the world is right outside your door. Wayne State University. Aim higher.
And we're back.
Oh, so Ina, my head is still spinning at that $38,000 number you just revealed. So the message of that conversation was we certainly don't want to take our government loans and consolidate them into private student loans. Is that what you're telling me?
Yes, that's what I'm telling you. If you have a government loan, leave it as a government loan. Work within those parameters.
Okay, great. And listen, since this is my first Money Minutes segment, I don't want to disenfranchise anybody who doesn't have a student loan and also wants to still get some great tips while they're with us here this morning. So I'd love to hear some other stories about how people might find money in their month.
So a lot of people will take money out of their house to find more money in their month, to pull some cash off their house. And I'm going to say to you, not all of us own a house, and that's not always necessarily the best idea. But you can still put more money in your month by refinancing maybe your cars. So I have a friend that was paying $770 a month for his car. Loves his car. It's a very cool car, but that's a lot of money per month. And when I looked over the numbers, he was paying too much interest for too long a period of time, and we refinanced the car at the credit union, and we saved him, we made the new payments $591 a month and saved him almost $200 a month. So that's one way that you can put more money in your month. Look at what your debts are and think about how you can refinance them.
So you're suggesting to our listeners to take a look at their monthly car statements and see what it is that they're paying in interest?
Not only what they're paying, but how long is their loan for? What is their interest rate? There are a lot of ways to refinance a car. If you bought the car from the dealer because you're getting $1,500 back or something like that, those programs usually require that you keep the loan for maybe 60 days, and then you can refinance. So take that discount and then add a bigger discount to it by refinancing it to a lower interest rate or to a shorter time period.
That's an excellent point. So are you also suggesting that I can use this method with other bills that I might have?
Well, so when we did this gentleman's car, we also, in looking at his credit report, saw that he had a personal loan for 10 years at 22%. And we refinanced that down to 8 years at 7.25% and changed his payments from $445 a month to $270 a month. So there are a variety of ways to refinance and a variety of things that we can refinance.
So it sounds like you saved this guy maybe close to $500 a month.
Yes, we saved him over $450 a month just looking at the debts he already had and not changing them, just restructuring them to make the payments more palatable.
Now, what did he have to qualify to get those lower payments?
So at the credit union, it's based on credit score. Everybody's loans are based on their credit score and their monthly income. And you want to shop. You really want to shop. You want to find out if you can join a local credit union. There, you can go to culookup.com, and it will ask you a bunch of questions and tell you what credit unions you qualify for. And you want to go to your local bank that you're already banking with and ask them the same questions and compare the answers. Don't just go with the first one you get, because you never know what the next guy's going to offer.
So now you gave us a great list of questions when we compile our student loans. Can you give us a similar list of questions for us to take to the credit unions and the banks so that we know we're asking the right questions but not hurting our credit by making these inquiries?
So you always want to know the interest rate. You always want to know how long it's for. How much are the payments? So we have a tendency to say, how much is it? Like, how much is that car when we're buying a car? And they'll tell you, I can put you in that car for $300 a month. That didn't answer your question. That didn't tell you how much the car was. So you want to make sure that when you're asking the questions, you're actually getting answers to the questions you're asking. And the questions you're asking are, how long is it for? What's the interest rate? Are there prepayment penalties? These are your three key issues on any kind of loan that you're taking.
But are they going to be
able?
able?
You're paying it for. The shorter it is, the less you pay. So if you're going to take a longer payment and then overpay it, you don't want to be penalized for that.
Right, but at the same time, Ina, they can't really know what the percentage rate is until they fill in the application, because it's going to be based on their credit score. Is that right?
That's correct. You should go to one of the free sites like Credit Karma and know what your credit score is going in, and they should be able to tell you what the range of interest rates are for that credit score.
Excellent. So they don't actually have to do a hard inquiry to give you that information if you come prepared with your credit report when you go to ask these questions.
Yes, and knowing what your magic number is key. And one of the things you should also know is over 700 is considered excellent credit, over 600 is good credit, 5 to 600 is okay credit, so that you're armed with, I know that my credit is great, or I know that it's not, so you can gauge if they're giving you a reasonable credit score to a reasonable interest rate based on what your credit score is. And if they deny you, or if they say, oh, it's not that, then you want to see that credit report, and they have to give it to you. That's another piece of information you should always carry in your pocket. If they tell you something that you don't think is true, they have to document it.
And then what do you do with that documentation?
Well, so then you can compare it to the information you have and refute it, or see if they show up with something that you're unaware of. Let's say their credit report shows somebody putting a mark on your credit score that you don't think is true. Now you can go and you can refute that through the credit bureaus and push your credit score up that way.
And are you seeing a lot of success with that?
I'm seeing a lot of success with that. I'm seeing a lot of people finding that the more information you come armed with, the better off you are. I can't tell you the best decision to make. I don't know. I can tell you that if you use the specific tools, if you come armed with information, if you've done your homework, then you can go and make a better decision. And that's really key to putting more money in your month.
I love it. I love it. Can you give us another, we've talked a lot about refinancing. Can you give us another hint of where people might be losing money in their month?
Well, so along with personal loans, so people have a tendency to do credit card consolidations and then still use their cards. Okay, so now I've taken all my debt and I've made a payment out of it. Let's say $300 a month as an example. But now I'm charging again, so now I have that $300 a month payment, and now I'm still using my credit cards. So now you've just made your payments bigger, not smaller. That's often a mistake. So we all need a credit card. Thinking you're not going to use your credit cards is ridiculous. But limiting how many you have, checking on what those interest rates are, and calling those companies and saying, you know what, that rate's too high. I know my credit score is X. I want a better rate, or transferring it, where there's a lot of programs where you can transfer it and get a lower rate for a period of time. You just have to be aware of how long that is.
So you would say it's definitely worth it for our listeners to take some time, maybe an hour once a week, sit down, really look at the numbers and see if there's some room for improvement that will actually put money back into their pockets.
Absolutely. The key to financial literacy, the key to financial health is awareness. The more you know about your money, the better off you are. And if an hour a week is too much, a half hour a week will do. But you need to just not ignore it. Ignoring problems never makes them go away. It just gives them room to fester.
I love it. So many people don't want to open those statements because they're afraid of what they'll see. But what you're saying, Ina, and what I always say is you have to know what's there. Okay, we have to go out to another break right now. So I'm loving this conversation. Thank you so much. Stand by for just a moment.
Today's show has been sponsored by Farmers Insurance in Voorhees, New Jersey. To protect your assets and the people you love, call Mike Skoranek, your local Farmers Insurance agent, at 856-336-2553.
We are farmers. Bum, ba-dum, bum, 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 bum.
Solano Community College transformed my life
and gave me the opportunities I needed to succeed.
I received the same university-caliber education
without the pressures of debt holding me back. Affordable and flexible, I fulfilled my undergraduate classes.
Getting to the information I truly have a passion for.
The decision to attend SCC empowered my future
and made my dream of attending Yale University a reality. Solano Community College, the educated choice.
Today's show has been sponsored by More Than Gifts. Come see our new location in Marlton, New Jersey. Not just gifts, but more.
Graduates of our university end up going places. Same goes for our students. Because while our campus may be a launch pad for bigger and better things, it's also a prime destination, filled with sights, sounds, and some pretty good eats. So, while you're preparing to take on the world is right outside your door. Wayne State University. Aim higher.
High-achieving students. Internationally renowned faculty. And award-winning alumni. A 226-year history of excellence and a beautiful urban campus. The University of Pittsburgh.
When it's time for Jersey Mike's to make a really great sub, this is what we do. It's what we've been doing. It's what we've always done. It's what we'll always do. So what are you doing? Jersey Mike's. Be a sub above.
Solano Community College transformed my life
and gave me the opportunities I needed to succeed.
I received the same university-caliber education
without the pressures of debt holding me back. Affordable and flexible, I fulfilled my undergraduate classes.
Getting to the information I truly have a passion for.
The decision to attend SCC empowered my future
and made my dream of attending Yale University a reality. Solano Community College, the educated choice.
So Ina, I'm just loving all of your great tips. And I think there's so much money being lost out there, and people are really just afraid to take a look and see what's out there and what they can do. But I'm always saying, you work so hard. What are you working so hard for? And stop throwing money out the window and burning it up. And as soon as you earn it, it's gone. And these tips that you've given today are real places where people can go and find actually money in the month. Now, the biggest question, when they find that money, what are you going to tell them to do with it?
So I'm going to tell you that emergency savings is one of my big themes. I'm not saying take all the money you save and put it aside. That's ridiculous, and it's not going to happen. Take 5-10% of whatever money you save and start putting it into a savings account. So when the next emergency happens, or the next good thing happens, a fun opportunity to go do something you've always wanted to do, you have a little pile of money waiting for you to either stave off that emergency or start planning for that new exciting adventure.
I love that. I mean, I really didn't expect you to say take that money and go put it on a vacation. I want to see that emergency fund growing just like you, and I also want to see your retirement savings growing, because that to me is, like you said, people go into their house to find money. Sometimes they go into their retirement plans to spend money, or to find money. And if you can stop the hemorrhaging and also find a few extra bucks through these methods, I'd really love to see you taking that money and putting it into your future.
I absolutely agree. I think that one of the biggest mistakes we make is stealing the money from our future by not putting money in retirement or taking it out. That's a big no-no. We should never do that. If we need money for something, we need to pull it out of the money we currently have, not steal it from the life we want to have in the future.
Right, and I am all about living within your means. I'm a big fan of, if you pay down those credit cards and consolidate it into a small interest loan, I'm so happy for you. But, only carry around one credit card and really try to learn to live on cash. And it's a little bizarre, and people don't expect it in this world. But when you go to sleep at night knowing that you don't owe anything, it gives you a lot of freedom to make decisions that you otherwise feel trapped in making because you have debt and credit card bills that you have to pay. Listen, I'm going to be here every Monday.
It really is. When you're not stressing over the money every minute of every day, it's a better quality of life.
Such a better quality of life. I love everything you had to say here with us. I hope you'll join me again on my Michelle's Money Minute show. And I'd like anybody to feel free to write in some questions and things that we can address on future editions. I'll be here every Monday morning at 9:30, and you can catch us at info@radiovisionnetwork.com. You can send in some questions, and I'll prepare the answers, and we can go from there. Thank you so much, everybody, for joining us today, and have a great Monday.
Today's show has been sponsored by Farmers Insurance in Voorhees, New Jersey. To protect your assets and the people you love, call Mike Skoranek, your local Farmers Insurance agent, at 856-336-2553.
We are farmers. Bum, ba-dum, bum, 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 bum.